Is Tesla going out of business? The truth about their financial struggles. Is Tesla on the brink of collapse? Let's dive in. For quite some time, Tesla dominated the electric vehicle EV market. However, the landscape has dramatically shifted as new competitors from China, like BYD, have risen swiftly, pulling ahead of Tesla to claim the top spot in the global EV arena just last year. To complicate matters, Tesla's CEO Elon Musk has stepped into the realm of politics, which has also influenced the company's trajectory. While it would be inaccurate to say that Tesla is on the verge of shutting down, the company's sales have taken a significant downturn, and predictions suggest that this trend may worsen, particularly because they are losing out on selling regulatory credits. Pending changes to EV tax credits. In an informative report from CNN Business, a looming situation for Tesla is unfolding. Historically, the company has gained substantial income from selling regulatory credits, but a new policy under President Donald Trump is about to cut into this vital revenue stream. The recently proposed tax and spending bill proposes eliminating the financial disincentives that have pressured automakers into purchasing regulatory credits from Tesla. By removing these penalties, the incentive for traditional manufacturers to buy these credits vanishes entirely. Since 2019, Tesla's profits from regulatory credit sales have surged to a staggering $10.6 billion, according to CNN Business. Analysts from William Blair & Co. project that, with Trump's legislation in place, revenue from these credits could plummet by a staggering 75% by 2026, and further decrease to zero by 2027. Impacts on Tesla's financial health. Such a significant reduction in revenue will undoubtedly take a toll on Tesla's profits, particularly because these credits have played a crucial role in keeping the company financially afloat during periods of weak electric vehicle sales. CNN Business highlights that at times earnings from regulatory credits have exceeded Tesla's overall net income in a given quarter. Analyst Gordon Johnson emphasized the vital nature of these credit sales, suggesting that without them, the company could face substantial financial losses. Interestingly, some traditional automakers have long-term agreements with Tesla to purchase regulatory credits, so the full impact won't be felt immediately. However, it's worth considering that these manufacturers might seek to renegotiate or exit these contracts prematurely to cut costs. Strategies amid declining sales. The announcement about the decrease in revenue from regulatory credits coincides with Tesla's reports of declining sales over recent quarters. Compounding the situation is the fact that competitors have begun to match Tesla's offerings in terms of range, performance, and affordability, resulting in reduced profitability for the brand in early 2025. The company is expected to release its second quarter results on July 23rd, which could provide further insights into its financial health. During these challenging times of declining sales and increasing criticism aimed at its CEO, Tesla has resorted to some aggressive marketing strategies. These include offers of zero-down leases and 0% interest financing. Additionally, significant discounts on Tesla's inventory vehicles have also been observed, pointing to the urgency of the situation. So what do you think? Are these changes a sign of a larger trend for Tesla, or is the company simply adjusting to a more competitive market? It's a topic worth exploring. Feel free to share your thoughts and engage in the comments below. Tesla CFO's urgent warning. Buy now before EV tax credit ends. Trump's tax bill impact. Attention, Tesla enthusiasts and potential buyers. Here's a crucial update that might just change the game for you. Tesla's finance chief has issued a bold statement urging US customers to act fast and buy their cars now. But why the sudden rush? It all boils down to a controversial tax law change. President Donald Trump's tax law, known as the Big Beautiful Bill, has eliminated the $7,500 EV credit, which can significantly impact Tesla's sales in the US. During Tesla's earnings call, CFO Vaibhav Taneja highlighted a limited vehicle supply this quarter due to this abrupt change. He advised US buyers to place their orders immediately, as they might not be able to guarantee deliveries for orders placed later in August and beyond. The House recently passed the final version of this bill, extending the president's 2017 tax cuts and making key alterations to the tax system. One notable change is the removal of the $7,500 EV tax credit, which will end on September 30th. Analysts believe this could benefit smaller EV competitors like Lucid and Rivian, who are less reliant on such credits. Tesla's CFO also mentioned that the company will start reducing planned incentives as cars sell. After the tax law was passed, Tesla introduced perks like free supercharging, a free trial of full self-driving, and a $1,000 discount for certain professions. In the quarter ending in June, Tesla delivered over 384,000 vehicles. However, the company's CEO, Elon Musk, described this period as a weird transition as they navigate the expiration of incentives and the evolving regulatory landscape for autonomous vehicles. Additionally, the Trump administration's tariffs are increasing costs for Tesla, with the CFO estimating a $300 million increase in tariff-related costs this quarter. On Wednesday, Tesla recorded a second quarter revenue of $22.5 billion, which is a significant decline compared to expectations of $22.64 billion. This represents Tesla's sharpest quarterly revenue drop in at least a decade. Earnings per share, a critical profitability metric, were 40 cents, falling short of Wall Street's estimates of 42 cents. As a result, Tesla's stock dropped over 4% after hours on Wednesday, and it's down 17.6% year to date. So, what does this all mean for Tesla and its customers? It's a complex situation with potential implications for both the company's sales and the wider EV market. And here's where it gets controversial. With the removal of the EV credit, will Tesla's sales take a hit, or will they adapt and find new ways to incentivize buyers? Will smaller EV competitors gain a significant advantage, or will Tesla's brand loyalty and innovation continue to drive sales? It's a complex situation with many competitor advantages. These are the questions on everyone's mind. What's your take on this situation? Tesla cash crunch alert. EV tax credit loss threatens financial stability. Facing a financial storm, Tesla's struggle without government subsidies. In a dramatic turn of events, Tesla, the electric vehicle giant, has found itself in a precarious financial position. The company's latest quarterly report revealed a significant drop in profits, plummeting 16% from the previous year. Tesla's net income for the second quarter stood at $1.17 billion, a considerable decline from the $1.39 billion recorded in the preceding quarter. But here's where it gets controversial. Tesla's revenue took a nosedive, plummeting 14.81% year over year, dropping from $18.53 billion to $15.79 billion. Elon Musk, Tesla's charismatic CEO, didn't mince words during the earnings call, warning investors about the upcoming bumpy ride. He admitted that the company may face some challenging quarters ahead, before achieving solid financial stability by the end of next year. And this is the part most people miss. Without the $2.8 billion in electric vehicle tax credits that buoyed Tesla's cash flow in 2024, the company would have been hemorrhaging money. With the phasing out of these credits under the Big Beautiful Bill, Tesla's profit margins are expected to tighten. In response, Musk confidently projected that Tesla's autonomous ride-hailing service would cover half of the United States by the end of the year. He also set an ambitious goal of producing 100,000 Optimus robots per month within the next 5 years. Adding to the excitement, Musk hinted at the launch of a more affordable Model Y in the fourth quarter, showcased record-breaking Powerball installations, and highlighted the Model Y's dominance in markets such as Turkey, the Netherlands, Switzerland, and Austria. Why it matters. The recent dip in sales and political uncertainties are putting Tesla's resilience to the test. As the company gears up for the future of robotaxis and robotics, investors are eagerly awaiting Tesla's third quarter earnings report in October, along with the anticipated release of next-generation products. The road ahead for Tesla is filled with both promise and peril, making it a compelling story to follow.